Listen up, apes. Fasten your seatbelts, secure all your diamond hands and delicious tendies because these meme stocks are going to the moon. Hey, what's up, guys? My name is Elaine, helping you build your foundation to financial freedom. If you were awfully confused by that intro, well, stick around because by the end of this video, you'll be an honorary member of one of the largest growing meme stock communities on Reddit, r/WallStreetBets. Back in 2012, a subreddit called r/WallStreetBets was created. This was initially created for like-minded individuals to share their insights about stocks, some research, and just what they were investing in. A major catalyst for r/WallStreetBets and what really spawned this new spontaneous meme investing was the great short squeeze of GME. A short squeeze is when a stock rapidly increases, and it's generally known to be a very uncommon situation in the stock market. And for this to happen, that stock must have a very large proportion of short sellers. Contrary to a regular long position in the market, where when you buy a stock and the price increases, you profit from that increase. A short position is when a stock decreases and you make a profit. A short position in its basics is when you borrow a stock from a lender. So let's say the lender gives me a $5 stock. What I do with this stock is I take it to the market and sell it again at that $5. As time passes, for my interest, I want this stock price to go down. So as the price goes down in the market, so let's say it goes down to $3, I then buy that stock back from the market, take that now $3 valued stock and sell it back to the lender at that $5 valuation in which we initially got it. I basically profit from the difference there. $2. Back in late January, GME or GameStop, an American video retailer, went through a massive short squeeze. This timid looking stock gained massive popularity within r/WallStreetBets. Reddit users discovered that GME had a huge amount of short interest and caught their attention. At its basic, r/WallStreetBets realized that GME had such a large short position and that the stock was on a general decline and these shorts were making really good money. The noble apes of r/WallStreetBets banded together and bought as much GME stock as possible. Basically, they forced these short sellers to buy back their positions. As the price of GME skyrocketed, many independent investors saw this fun and decided to join on in. As they kept buying more GME stocks, these short sellers were forced to buy their positions, thus driving the stock even higher, and higher. As this process continued, GME stock price went from a low of $17 to $483. GME is no misnomer. Recent Reddit-fueled short squeezes include AMC, the American entertainment company, and Wendy's, a fast food company. These short squeeze meme stocks are becoming more and more common, and many investors out there, including myself, have thought, okay, what goes into picking the next meme stock, and where is the next short squeeze gonna pop up? The basic formula includes 1. A stock. Second is poor performance. This might be bad investments, poor earnings, or just simply trying to survive in a pandemic. Third is said stock underperforming, and value-minded individuals or investors shorting this stock because they can see the general decline continuing. Number 4 is when this overly shorted stock catches Reddit's attention. And I've nailed it down to kind of 2 things here. 1, maybe Reddit actually thinks that this stock is undervalued and that they're just buying it at a steal of a deal. Or 2, that short sellers are scumbags and they deserve to get squeezed. Oh yeah, don't forget, punishing short sellers is funny, life's a meme, and YOLO. Research shows that 40% of these ill-informed investors jumping in and riding out the short squeezes are from the ages of 18 to 44. A leading factor of how these meme stocks gain such traction and absolutely explode is due to the low barrier of entry. Trading securities such as GME, AMC is quickly becoming almost a digital extension of young investors' lifestyles. The no-commission trading apps such as Robinhood and Wealthsimple is making it much easier just to open up an app and trade. Basically, anybody with a cell phone nowadays can trade on the market. The question remains still, can meme stock investors truly depend on these events for a source of income? On the one hand, investors who predict, have early insight, or just get plain lucky have the potential of making millions and millions of dollars off of these meme stocks. However, investors risk losing just as much. One notable occurrence is when the great GME short squeeze was occurring, the Robinhood app shut down its services. This caused many investors to lose more than $10 billion when the price of GME quickly turned around and dropped 44% and being unable to access their stock on the Robinhood app. Depending on their entry positions, investors could have made thousands or millions, or got left burnt feeling FOMO. One notable point here to keep in mind is that the current bull market is somewhat helping young investors overinflate their confidence because they're throwing a ton of cash into the market and seeing some good returns. However, many young investors are quite ill prepared for challenging times that we might see in the following few years. At the end of the day, it really comes down to your own personal risk appetite. You might want to join in on the fun and potentially make millions, or get left a little burnt. My suggestion really is to just continue using fundamental analysis and put a lot of research into these stocks before throwing all your cash into there. I mean, this is one way just to make a great steady income and really have a growth-oriented outlook on investing. If you guys found any value in this video whatsoever, please hit that like button down below, and I'll deposit 1,000 RWallStreetBets lapel pins into your bank account. My name is Elaine. I'm here to help you build your foundation to financial freedom. See you guys on the next video. Peace.